السلام عليكم. أعوذ بالله من الشيطان الرجيم. يا أيها الذين آمنوا أنفقوا من طيبات ما كسبتم ومما أخرجنا لكم من الأرض ولا تيمموا الخبيث منه تنفقون ولستم بآخذيه إلا أن تغمضوا فيه واعلموا أن الله غني حميد. الشيطان يعدكم الفقر ويأمركم بالفحشاء والله يعدكم مغفرة منه وفضلا والله واسع عليم. يؤتي الحكمة من يشاء ومن يؤت الحكمة فقد أوتي خيرا كثيرا وما يذكر إلا أولو الألباب. صدق الله العظيم.
Once again, welcome everyone to the seminar on financial inclusion through Islamic finance. We appreciate you making the time for the event. Over the next 2 hours, our distinguished speakers will share their thoughts on the topic. The seminar will include presentations from each one of our speakers, followed by a panel discussion and a Q&A session. So to quickly introduce our speakers, we have Brother Irfan Siddiqui, the CEO of Mizan Bank, Pakistan. We have Dr. Punki Samadhi, who's the director at the Ministry of National Development Planning of Indonesia. We have Brother Najmul Hassan, who's the director of the Financial Institutions Development Department at ICD. We have Sister Nida Raza, who's a director and the head of advisory services at ICD. We have Brother Rafi Hussain, who's the CEO of Finocracy. And finally, we have Brother Wasim Abdul Wahab, who's a senior investment specialist at the IFSD department at IDB. So without further ado, let me invite Brother Wasim to present his opening remarks. Okay, so we will quickly introduce our speakers as well. So Brother Irfan Siddiqui, Brother Najmul Hassan, Sister Nida. So Brother Wasim, over to you.
Thank you. Assalamu alaikum. Can we have the first presentation, please? Yes. Assalamu alaikum again. Bismillahir Rahmanir Rahim. I would just like to introduce the topic of today's, which is financial inclusion through Islamic finance, advancing financial inclusion in IDB member countries. As you can see, almost half of the world's population is currently unbanked. That's more than 2 billion people in the world right now. And 95% of those unbanked people are in the world's developing countries. a lot of which are IDB member countries. Just like to take you through what is exactly meant by poverty. The Oxford University and UNDP developed this index, which is called the Multi-Dimensional Poverty Index. It consists of various areas: health, education, and living standards. And then they have these sub-areas which constitute the levels of poverty. So it's not only income related, there are many, many other types of poverty. And these are also the unbanked people. Most of these are unbanked people. This is just showing you the levels of poverty in our member countries, where they are in the world. Pakistan, Bangladesh, and Nigeria, amongst IDB member countries, constitute about half of the unbanked and poor people in the world. Why have financial inclusion? This is a question always asked. As you can see, we can relate it to the following Sustainable Development Goals of the United Nations, which you see on screen right now. And financial inclusion also has solutions. It provides solutions for economic issues, environmental issues. It solves access problems, financial access problems. It enhances usage of banking and other services, as well as ensuring the quality of life and social behavior, the resultant social behavior, which should be positive. Now, the IMF undertook a study in 2015, which stated that the greater financial inclusion can lead to higher growth in countries, and it can also increase the stability and economic growth, which leads then to reduction in risk, and there are other issues such as credit access, which are then minimized for financial inclusion efforts. On to the IDB. For those of you who do not know about IDB, it's a unique South-South cooperation institution. We have a global membership spreading over 4 continents, and our membership consists of about 57 member countries. Till last 2 years back, we had 56. Then Guyana joined us, and we have now 57. All the OIC member countries are now our members as well. And since inception, the Islamic Development Bank has financed $124 billion worth of projects in member countries. This is our strategy, the overall strategy of the IDB, and it consists of 3 areas, basically, which are the strategic objectives. First one is inclusiveness, the second one is connectivity, and the third one is Islamic finance sector growth. These are then channeled down into various other objectives and KPIs. Now, the 4 areas of financial inclusion, basically these are the 4 areas, and you can see where each of the IDB members, the entities, are working. For example, IDB and ICD are working in one area, IDB and IRTI are developing capacity, IDB, IRTI and ICD are working on another area. So this is how we sort of go and develop financial inclusion as a whole. How to advance financial inclusion? The solution is not to just throw money at it. It defeats the purpose. But what we have found in our work in our member countries is that there are several reasons why financial inclusion does not work. Sometimes markets are not ready. There's lack of consumer education. Enabled institutions are not there. Legal frameworks are not there. Regulatory frameworks are not there. So there are many. It's a multi-dimensional problem, which we try to solve in various ways and means. The strategy, what we have for enhancing financial inclusion, we start out by asking questions from our member countries. For example, what is the legal and regulatory environment like? What extent is the population, is the demand from the population? This third one is very important. How much political will is present? If you do not have political will, believe me, you will not go anywhere. No matter how good laws or regulations you have, political will is very, very important for any financial inclusion strategy, or for that matter, any other strategy to go through. How well developed is the country economically, otherwise, and what are the government's objectives, and how much is it willing to pursue those objectives. So you have to look at all these questions, and then you, on that basis, you have to go and develop the strategy. And you cannot use a cookie-cutter approach. It has to be tailored to each country's policies and regulations and demands from the population. This is just a process. It could be used for implementing the financial inclusion strategy. Is it coming out clear? Yeah. So we start out with preparation. You go on to assessment of what's happening, and then so on and so forth, until you reach a program whereby you can implement, you get the partners for implementation, and then you implement the financial inclusion strategy in any member country. These are some of the areas in which IDB is working. We have Islamic finance development. I won't go through all of them. Financial inclusion. The strategy is covering all the 6 areas that you see on your screen right now. Now, just a token of what we've achieved up till the end of 2016. We had undertaken 47 technical assistance projects. Now IRTI is handling these. Previously, our department was handling it. So 47 technical assistance projects for an amount of $8.8 million. We had 12 microfinance programs in 12 countries, and we had investments in 36 Islamic financial institutions. So if you see as a whole, this is how we are supporting financial inclusion in member countries. The 47 technical assistance, this is just a bit of detail. What we have done in the countries you see, the regions where you see where we have worked. And what have we achieved? These are some of the examples. This is not all. But for example, we have Pa Punki sitting here. I worked with him on developing the Islamic financial sector strategy for for Indonesia. And on the basis of this strategy, which was just launched, I think, last year, we have the government of Indonesia has developed individual strategies for each sector, I believe, and that is now in the process of implementation. And the first recommendation of our report, which was to form a national high-level committee, that has already been done. And if I'm correct, the president of the country is heading this committee, and you have ministers which are then following up on each area. The 12 microfinance development projects we have ongoing. These are the countries you see on the screen. We have various type of projects. In some countries, we're doing Apex type of institutions. Somewhere we are doing the Islamic financial institutions. Somewhere NBFIs, non-bank financial institutions. So it depends on what the sector is and what the country demands. On that basis, we go and deliver these results. We have the following countries in which we have investments in Islamic financial institutions. We have Thaqaful companies, Islamic banks, Islamic microfinance institutions. So this is just a list of what you see, and the geographical representation is also there. In 23 countries, 36 institutions in 23 countries. The Islamic Solidarity Fund has a program called the Microfinance Support Program. They have also helped in 9 countries to develop microfinance in this area, and they're also contributing to the development of Islamic microfinance. Together we build a better financially inclusive world. Thank you very much.
Thank you very much, Brother Wasim, for setting that stage for us. Now, I would like to invite Brother Najmul Hassan, the Director for Financial Institution Development Department, ICD.
Assalamu alaikum wa rahmatullahi wa barakatuh. Nahmadu wa nusalli ala rasulin kareem. Amma ba'd, a'udhu billahi minash shaitanir rajim. Bismillahir rahmanir rahim. My name is Najmul Hassan. I look after the Financial Institution Development Department within ICD. What I'm going to tell you in my presentation, talk about a little bit, is about what ICD is, what Financial Institution Department is doing in terms of setting up the channels. And then from my last slide would be just to share some of our experience of how to make a financial institution successful. Obviously, this is not a completely exhaustive thing, but what we have learned from experience in various geographical locations that we are there, what are the key factors which really determine whether the financial institution that is being set up is going to be successful or not. So that's going to be my last slide over here. So let me just begin by introducing ICD. ICD is the private sector arm of Islamic Development Bank. Islamic Development Bank has, it's really looking after the sovereign risks for sovereign countries. ICD looks after the private sector. There are other organizations which are like ICD, the ISECA, IRTI, and ITCF, which each have a specific mandate, and ICD has a mandate to look after the private sector within the member countries. The rating of ICD is AA by Fitch as well as by S&P. By Moody, we have AA3 rating. So we are a very highly rated financial institution. ICD was itself set up in 1999, and today we have a paid-up capital of about 882 million. We are also in a process of increasing our capital, and I think this year our capital will go above about $1 billion or so. In this capital, obviously, IDB is a major contributor. They are the parent company. They have 46% share, and then the other member countries that are there, including public institutions. ICD is playing a major role, and it's playing a major role in development and promotion of the private sector within our member countries, and so therefore it's acting as a vehicle for economic, social growth, and prosperity of our member countries. Now, let me just step a little closer to what ICD is all about, and within ICD, also I'd like to really touch upon the role of financial institutions of having this financial inclusion that is there. So within ICD, we have 4 business units. One of them is FIDD, which is the unit that I look after, which is the Financial Institution Development Department, where we have a role to create financial institutions or to set up financial institutions in member countries. In addition to that, we also set up Ijara companies, which are leasing companies in many markets where we do not get licensed to do a bank. Sometimes we do a leasing company or other financial intermediaries. We also have another division within FID, which is what we call the line of finance, where we actually give line of finance to various financial institutions in our member countries. And through these financial institutions, we try and reach the SME market. Besides this, the other 3 departments are direct financing and development department, which does the real projects within the member countries. Then we have the asset management department, and they have various type of funds, including income, money market fund, income funds, capital market funds, etc., SME funds. And then we have the advisory division, which actually helps us in the sense of opening channels to provide that, the ability to set up financial institutions, to convert conventional financial institutions into Islamic, and to also help in setting up windows and creating that enabling environment within the member countries. Now, if you look at the role of FID, which is what I look after, in Financial Institution Development Department, the line of finance, we have a cumulative disbursement of nearly about $700 million US. Cumulative approval is nearly about $1.6 billion. And as of now, our portfolio is about close to $400 million. And we're targeting to go up to about $600 million by the end of this year. We have 40 institutions who have taken advantage of our line of finance. And primarily, line of finance that we give to the department is through them. We actually help the SMEs in various countries. It's very difficult for us to sit in Jeddah and think that we understand the credit risk. The credit risk we believe, is best understood by the financial institution in that country. So therefore, we take a view on the financial institution, and then we help them to actually give this money to the SMEs within their own countries using the Islamic documentation. This has created a major boost for the SMEs in the member countries, and as a result ended up creating a number of jobs that we also are monitored every year as to how many jobs that we are creating. Line of finance happens to be a very low risk-based product because typically we are looking at the credit risk of the financial institution, and we let the financial institution look at the market credit risk. It's also a very sort of a flexible transaction that takes place. We use either a wakala or a commodity muraba in order to do that. And we've seen that in the last couple of years, our markets have gone through a fair amount of turmoil, particularly if you look at the markets, especially in the Central Asia, where there have been huge currency crises. But alhamdulillah, we've seen that the line of finance has remained intact. Our NPLs over here are less than 0.1%. So therefore, we've seen over the last 5-6 years since we have accelerated the use of line of finance, that this is a good, safe way in which we can do a direct intervention in the market, make sure that the credit goes to the SME level without taking too much of risk. My next slide is just to show you some of the institutions who have benefited from the line of finance that we have given. Obviously, we have more than 40 institutions that are taking this line, and some of them are just depicted over here. The next department, the next division that we have is what we call the FI, which is the financial institution. Now here we take equity investment, or we do equity investments into financial institutions which we call the channels, which are being set up in the member countries. In majority of cases, these would be greenfield projects, and as a result, we end up taking a greenfield project risk, which is considerably higher. But in certain cases, we also go into brownfield projects where there's a financial institution set up. It's a conventional, it converts into Islamic, and we come in with an equity injection, and we just don't put money on the table, but what we do is we bring the experience that we have in terms of corporate governance, in terms of risk management, in terms of products that have been used, the documentation that has been used, and as a result, we bring, along with the equity investment, we ensure that the banks are governed in a proper manner. So as of now, we have 12 banks where we have active participation in terms of equity. We have 3 more on the drawing board, which should be opened up by the end of this year. So by the end of 2017, inshallah, we will have about 15 banks. We have 11 ijara companies, mostly in Central Asia. And then we have specialized companies like mortgage companies, especially in Saudi Arabia. We have a very large mortgage company. So our total equity as of now is about $250 million, which has gone into the FIs, which is the financial institution. And in the NBFIs, we have about nearly close to around $90 million. The next slide actually just shows you how we have grown since we had this channel strategy, which was set up in 2011, where we said we will have these channels, which will be primarily there, and we will actually deliver through our channels. So this strategy was adopted in 2011. A number of banks were there, which moved in over here. And since then, we have progressively every year opened up newer channels in various member countries. And as we stand now, we are in 1437 or 1438. We have just recently gone in for a bank in Morocco, which will be just set up, and a leasing company in Turkey. And we are actively looking at a bank in Uganda and also in Brunei, which hopefully should become a reality in this year, inshallah. So some of the banks that we have, if you see over here, these are just, again, the logos starting from a very small country like Maldives. We set up a bank over there. When we were going to set up a bank in Maldives, nobody wanted to partner with us because Maldives had a population of just about 340,000 people, and people thought that this is such a small market that independent bank will never be successful. And inshallah, I'll share some of the results from this market later on. I'm just going to touch upon the last slide, which is what I said in the beginning. Some of the critical success factors that we believe are so important for us. The first and foremost is to have the right captain of the ship. Without that, I think this is a huge responsibility on the board. When you set up a board, and like ICD is represented on the boards, that the first thing we have seen is if you have a wrong person on the top, no matter you may be in a large market, a high growth market, a good return market, a low risk market, if you don't have the right person on the top, you will not be successful. In some of the examples, and I really don't want to quote the names of the banks, we went into markets, large growth, huge market, great potential, other banks doing extremely well, and we found that our banks really continue to struggle till we had to make this change. So I think one of the most critical factor is, and the responsibility of the board, is to make sure that you have a right leader at the top. That's where it begins. The other thing that people often miss out is the perception. When you set up a bank, it must be perceived by people to say that this is really an Islamic bank. And I give you the two examples, the banks that I really worked with, Brother Irfan Siddiqui. If you were to go to Pakistan and ask, please tell me, ask a common man, tell me which is a good Islamic bank or which is an Islamic bank. My bet is 9 out of 10 people will say, go to Mizan Bank. From Mizan, I went to Kenya, and if today you were to go to Kenya and ask people, please tell us one bank which is doing Islamic banking. There are 14 conventional banks with windows in Kenya. There are 2 Islamic banks. They'll say, go to Gulf African Bank. So the perception that has been built in people in these markets is that these are the banks, and both these banks are extremely successful. There are no parallel. These are the Coca-Colas of their market. They have done so well. Same is the case in Maldives. You go to Maldives, ask at the airport which is an Islamic bank. They will say, go to Maldives Islamic Bank. So I think this is the perception that gets built up, and this just doesn't come on its own. It needs to build over a passage of time. The third thing is the regulatory support. Now, if you don't have a support from your central bank and Ministry of Finance and other departments, you probably will exist at the periphery of the banking, make a small profit, but you will never come into mainstream. So it's extremely important that you must have the right environment and you must have the regulator to support this. This must be part of the KPIs of the regulator, that Islamic banking needs to grow, and the share of Islamic banking must be so much in this year, in 5 years, where the share should be. It should be their responsibility. See the case of Malaysia. The reason why Malaysia Islamic banking took off and has been so strong is because the regulator has taken upon itself that this is their KPI. It's not just the bank. They need to support this. Fourth is the treasury management. If you don't have instruments which can actually do your liquidity management, I think it's like driving a ship without a rudder, because you have to really steer it past. And so therefore, treasury management instruments are there. And here again, you would find that the only way you will be able to get this support for short-term management instrument for your treasury is if you have a supportive ministry and if you have a supportive central bank. And last but not the least is the operational efficiencies. I think that's something that has to be kept in mind. You need to really watch your cost-to-income ratios. If your cost-to-income ratios are going out of whack, no matter what growth profile your bank is going to be in, you will suffer, and you will suffer in big time. And I think we've had many cases within where we have set up good banks, we have made great branches, we have put up beautiful buildings, we have renovated the branches, we have brought in superior service to the customer. But at the cost of this has been that our cost-to-income ratios have gone out, and as a result, we have continued to suffer over there. I think if we keep these 5 basic principles in mind, and use them before we go on to the drawing board, you more likely will have a financial institution that's going to be successful, irrespective whether you have a small market or a large market, irrespective whether the world is passing through inflation or it's going through a recession. Your bank will actually continue to do better than what the market is doing and give you a decent return. So I'd like to just thank you all. As I see a number of times the card is being flashed, I'll stop over here and look forward to taking questions after this. Thank you so much.
Thank you very much, Brother Najam. I'd now like to invite Dr. Punki Samadhi to go over his presentation. Thank you.
Bismillahirrahmanirrahim. Assalamualaikum warahmatullahi wabarakatuh. When we talk about Indonesian financial inclusion through Islamic finance, let me just go back to the condition in 2013. The report on the Global Financial Index showed that actually about more than 2 billion people who are unbanked. Indonesia has about 63%, or 163 million of the total Indonesian people. So it is only about 95 million people who have access to financial institutions in our country. Of this 95 million people here, for example, only 26.6%, or about 63 people, have access to loans, and about 31 million who have access to, 63 million to have access to savings, and 31 million to have access to loans. But again, the Financial Service Authority have made different categorization of how to measure the financial inclusiveness in Indonesia. And we have different numbers here. For example, here I can show you that the Financial Inclusion Index shows that 2013, the number is about 59 or almost 60%. And then by 2016, it rose up to 68%. The different categories, because actually our financial service authorities includes all the cooperatives, financial service cooperatives, and many other financial institutions, and sometimes it also includes the what we call as the Baitul Mal wa Tamwil here. Now, in terms of the financial literacy index, it is also rose from about 22% to almost 30% by 2016. Now, what I would like to do, why we have a little bit increase in these two numbers, because of the intervention that we have been doing since the past 3 to 4 years, which actually, before I explain this to you, I would like to take you to the supply side situation in our country. Here, for example, I can see that, you can see that actually, in terms of the banking, we have about 13 commercial banks with about 21 Sharia windows. And of course, it has also include the 166 rural banks, Sharia rural banks here. In terms of takaful, we have about more than 50 takaful companies. And microfinance institution, for example, on the right side there in the middle, we have about 3,360 financial Sharia cooperatives, and only God knows how much numbers of the unregistered Baitul Mal wa Tamwil, because up to date, we don't have the official statistics of these numbers. And in terms of the capital market, we also issued some products here. For example, we have sukuks, we also have online sukuks, we also have retail sukuks here. And the sukuk emission by 2016 is about 881.2 million US dollars. We also have venture capital, pawn shop, and leasing companies here. Now, what about the demand side? The demand side, again, of the 95 million of Indonesian people who have access to financial services, only 23 million, a little bit less than Malaysian population, that have access to Sharia financial banks in Indonesia. The customers of pawn shop is about 823,000 people, and the rest you can see here, the number of customers for Sharia cooperative members or the retail state sukuk customers. Now, the policies that we have been doing since the past 3 years, actually, especially last year, is the milestones of the major improvement in our policies, is that, as Brother Wasim said, last year we issued the Master Plan for Indonesian Islamic Financial Architecture. It covers all financial institutions, starting from banking, capital market, insurance, and many other non-banking financial institutions, including the religious funds, for example, Hajj funds, Wakaf, and Zakat. And then, especially for the financial inclusion, we also launched the National Strategy for Financial Inclusion. It is actually a broad strategy with specific stress on Sharia financial inclusion strategies here. Again, as Brother Wasim has mentioned earlier, in last year also, we established the National Committee on Islamic Finance, because we believe the reason why the Indonesian Sharia financial system has been growing not as fast as the conventional system, because it is based on the market operation. When it is based on market operation, it means that actually it's up to the market where the preference go. And this, which we believe, do not really provide basic incentives or enough incentives for the corporation. So that's why in this national committee, we established a special unit to promote the financial inclusion on the Sharia financial system. Of this strategy, I can show you the pillar number 1. It is about financial education. We have many different programs here. For example, we do periodic national survey. We also have I Love Islamic Finance National Movement. We also have non-cash national movement as well. So there are many different strategies that we promote to education on the financial system, including the Sharia financial system. The second pillar is about property right of the community. What we believe is that, especially in the conventional financial system, is that when we make loans, usually banks ask for collaterals. And collaterals are actually very, very sensitive for the customers. So what we do is, we improve the process of formal rights registration, especially for the SMEs and cooperatives. The number of SMEs in Indonesia is more than 55 million companies. And cooperatives is actually about 20 to 30 million cooperatives here. We also provide facilities to accelerate land certification. So by doing this property rights ownership, we believe that actually access to financial services will be better. Pillar number 3 includes intermediation and financial distribution channel facilities. We provide, for example, different products. For example, student savings. We also provide non-cash payment system. We also provide branchless banking. And this of the branchless banking, actually, they need agents. And now there is a tendency that actually post office can become banking agents. So that's why here, actually, on the left side down there, you have the no-frills account. That includes Sharia postal saving accounts, because postal savings provides actually gyro accounts. It is conventional, but now we would like to bring it into Sharia gyro accounts. Then it is a matter of IT improvisation to become a postal saving, Sharia postal saving accounts. We also have actually the improvement of the management of zakat and wakaf. We have now online zakat and wakaf payment system. And also we have in the development of retail government securities, we also have retail sukuk products here. So many varieties that we promote to the market. And now we are going to bring you to the pillar number 4, which is actually education to the public sectors. Because we have so many subsidy programs, for example, for subsidized rice, kerosene subsidy, fertilizer, and energy. And this covers millions of beneficiaries. Now we have tried to introduce non-cash payment system to expedite these subsidies. So there will be lots of improvement in our subsidy payment systems, from cash to the non-cash system. The second one is about distribution of government assistance through non-cash mechanisms. This is actually what I mean, especially by scholarships. We have at least 20 to 25 million students receive scholarship from the elementary level to the university students. So we would like to bring non-cash payment systems to the government assistance programs. And the last one is actually on the distribution of government's microcredit program. It is actually small credits to the SMEs, especially. The amount of the credits is about $5,000 to $50,000, and we would like to make it more electronically by mobile banking system available for them, so it will be easier for them to access this kind of credit programs. The last one of my presentation is about the consumer protections. We have 5 different strategies to promote financial inclusion through consumer protection. For example, issuance of financial sector consumer protection regulation. We do not have up to date is the Sharia financial safety net programs. What it means, what it takes, what is the criteria, things like that. This is actually what we need to develop further. We also have some kinds of other programs, for example, development of financial customer care, market conduct activities, especially to early detection for potential disadvantages, business practices, and many other programs here. I think by having this slide, I will end my presentation. I will be happy to take your questions. Thank you very much. Assalamualaikum warahmatullahi wabarakatuh.
Thank you, Dr. Punki. I would now like to invite Brother Irfan Siddiqui, the CEO of Mizan Bank, to share his thoughts.
Right, okay. This next, huh? Okay. Right. Bismillahirrahmanirrahim. Assalamu alaikum. I think very thoughtful presentations, especially the last one. Indonesia being the largest Islamic country, Pakistan happened to be the second largest now. A lot of stuff which I had covered in my slide was touched by Najm Saab and Wasim as well. What was coming to my mind was that when we talk about financial inclusion, I think the biggest driving factor for any financial inclusion is Islamic finance. It was unfortunate to see in Dr. Wasim's presentation that most of the poverty resides in our member country, Pakistan, Indonesia, other places as well. So I think there's more need for us to really adopt financial literacy, financial inclusion. The IFC and the World Bank and everybody keeps talking about it, but they don't have that problem which we have in-house. Mizan, which Najm Saab was a colleague in Mizan Bank long time ago. When we started Mizan Bank from scratch in 1997, Najm Saab? We were the smallest bank. In fact, we got the license in 2002. And now, 15 years later, we've climbed from number 32nd to the 7th largest bank in the country. Obviously, a lot of ingredients which has taken us there. But the fundamental thing which I feel is that people own choice for Islamic finance. We had a branch manager who was a very, very efficient branch manager. He migrated to Canada. And, when he was going abroad, he came in and told me that, he said that, even if you run Mizan Bank without a branch manager for, 6 months, nothing will happen wrong because people just come in automatically. It's the power of the Islamic banking which brings people to the bank. And obviously, if you give them the right service or a half decent service, they'll stay with you. But if you don't provide them the service, then they'll go to conventional banking. So really, the crux, the biggest tool which we have available in the developing country or poor countries is the faith. That they don't want to do things which are tangent to the religion. Especially when it matters for their own selves. In Mizan Bank, we are the largest providers of home finance and largest providers of auto finance. And a lot of our customers actually are treasury heads, not a lot, but some of them are treasury heads of conventional banks, where they can get a loan at a subsidized rate of a very low percent. But they do not avail that, and they come to an Islamic bank and pay much higher cost to get a house loan. Because when it relates to their own individual needs, they don't want to be in tangent with what Allah Ta'ala has asked us to do. So I think our biggest marketing, biggest thing is already said by Quran and Sunnah that, riba is haram. And we really need to, educate people on that. Educating them that you have an account, it's better, educated. We should do all of that. But the biggest trump card, I would say, is that, people would not go to conventional banking, especially the lower segment or the poor people, because of faith reasons. The State Bank of Pakistan conducted a very detailed survey in cooperation with DFID, which is the UK aid agency. And they came to some very surprising numbers that, percentages like 80% and 90% people would not go to banks because of riba reasons. So I think this is one fundamental point which I thought I'll do before I go to my presentation. Global overview, like Wasim covered, mashallah, 4 billion out of 7 billion, 50% don't have a bank account. Unfortunately, most of it is in Muslim countries. Pakistan itself, 74% of our, we don't have a formal banking account. We talked about literacy. Literacy rates, unfortunately, again, is lower in the Islamic world. But I think currently the literacy rate, in my view, has been redefined. If you see illiterate people who are drivers, messengers, cleaners, they would use their mobile phone better than I can do. They can do a lot of things on that, which normally they would have a 2 SIM card. I hardly manage my 1 SIM card all right. It gets discharged or it doesn't work or whatever. But so the literacy has been redefined not by reading A, B, C, D and Alibab or whatever, but it's the ability to use mobile phones. And by using mobile phone, then they're able to communicate whatever they need to communicate, where they are, location, money transfers, mobile top-ups. All these things are all literacy. So literacy rates are no longer a yardstick for non-banking. So, we need to see that how mobile phones or smartphones can help us to bring people who are not banked. Pakistan has got a population of close to 200 million. And the mobile penetration rate there is 70%. 70% of that population, which include poor people and illiterate people, have a mobile phone. So they're your potential for your customers. And only, I think, less than 20% have got bank accounts. Branchless banking in Pakistan has moved quite rapidly, like my brother was saying in Indonesia. POS terminals is now everywhere. Previously, using a credit card was very difficult. Now, debit card is the name of the game. By the way, Mizan is now the 7th or the 8th largest bank in Pakistan, but our POS transactions in Pakistan has been, for the last 2 years, has been the highest in the country. So I think not too much of our own work, but people prefer to use Islamic finance mediums on that. Total mobile wallet accounts currently stand as 20 million, and State Bank is targeting that this number should go up to 70 million by 2020. Obviously, it's a very steep target. In terms of mobile application, we developed a mobile app. Mashallah, Mizan app was rated as #1 in Pakistan, despite a lot of foreign banks being there. And if you see the numbers, they are like doubling and tripling every year. So last year, we had a 200% growth on that side. Then we introduced something called a payroll card, in which a card is issued to workers, especially in an environment like Saudi Arabia. I'm sure it must be happening, but where people, by hundreds and thousands, people are working in factories, and they were used to getting cash payments. So, they would pack money in the envelope, give it to them, counting and all those things would take weeks to disburse payroll. So now this plastic card has been given to them, and one single letter by the corporate, we can load their salaries on this account, and they can use this account on any ATM. And now we are going to put them on the POS machines as well, so with a Visa-enabled card. So I think that will obviously bring a lot more population in it. One project which we are currently working on is mobile phone pay, which works on the QR code. So it's really, you show to the machine, and the machine would automatically, without you swiping it, it will do that. And what we are hoping is that this will actually make the ecosystem, in buses and fruit and vegetable vendors and all small places. My last slide is a very successful venture which we floated with a mobile operator called Mizan U-Paisa. This was the first, at least to our knowledge, this was the world's first Islamic branchless banking. And a Sharia-compliant product was given to every home in Pakistan through what is called branchless banking agents. So the agents are not proper branches. I mean, they are small little shacks, or primarily people selling the mobile top-up cards. So this was a very successful operation. I had actually copied an ad which we ran on the TV commercial, but that didn't work a while ago. I'm sure it's still not working. But this ad basically showed a school teacher or a low salaried person exiting his house and the wife saying that, why are you sending money through Mizan Views Paisa? So he said that, if I'm earning halal money, I want to send the money to my mother or brother or sister or whatever in a halal manner. So it is a very effective ad. Unfortunately, it couldn't be downloaded here. But I think, like I said, to sum it up, I feel that our biggest advantage is Islamic. So we should drum it in as much as possible, because that will bring people to the banking world. Thank you so much, Jazakallah.
Thank you very much. Thank you very much, Brother Irfan. Now, finally, I would like to call Brother Rafi Hussain to go through his presentation to us.
Assalamu alaikum. I'm not oblivious to the fact that I'm the smallest fish in the esteemed panel that we have here today. So let me just start with a quick introduction of who I am. My name is Mohammed Rafi Hussain. I'm the CEO of Finocracy, which is a small but growing R&D firm, research and development firm, focused on creating concepts, initiatives, and platforms that are at the intersection of ethics, finance, and technology. And as you can see by our name, financial inclusion is a very close to our heart at Finocracy. And really, it starts at the top. Oftentimes, when you hear the term financial inclusion, we think about the people at the bottom. But reality is that the people at the bottom are being squeezed by financial exclusion and financial exclusionary policies that are at the top. And it's they're very simple examples that we all know today. And when you look at companies that are on NASDAQ or New York Stock Exchange, and when it comes time for their quarterly earnings, a few months prior to that, you'll see them laying off 20,000 people or closing down factories. Now, that's a financial exclusionary policy, right? To appease your shareholders, if you're cutting out 20,000 livelihoods, that's creating financial exclusion. That's not inclusion, but that's the type of economic system that we live in today. And it got me thinking, especially today. I was at the launch of the Global Islamic Finance Report, and one of the outcomes of that report mentioned by IDB was that Islamic finance, for it to become a catalyst for change, it needs to start creating products that do not mimic conventional products. And that had me kind of imagining what type of society does Islamic finance need to be able to create products that don't mimic conventional ones? What sort of conditions are necessary for Islamic finance to thrive? So what is a utopian environment for Islamic finance to reach out to its true potential? And in reality, we're getting very close to that. And what is that environment? That environment is a social and economic world where we can capture transactions that are happening between human beings and the real economy. So what does that mean? That means that if a solar electric grid or a wind farm is producing electricity, we can capture who is producing that electricity, where it's going, and how can we collateralize that economic benefit for the benefit of the society around it, right? That utopian world also includes an SME where we can go to a local grocery store and we can go into a true profit-loss sharing mechanism because we have the ability to capture their transactions on a real-time basis. That world is also a world, once again, where corporations and their shareholders are rewarded for creating actual innovation, actual jobs, and actual economic product. But how do we do that? Are we getting close to that? And that's kind of where we begin. And for that world to come, we need to focus, of course, on financial inclusion. And financial inclusion is part and parcel with being able to finance sustainable development in the world we live in today. So fintech, we've all heard it. It's right in front of us. This revolution is the greatest gift for Islamic finance as an industry since the advent of Islamic finance itself, because it allows us to reach that utopian vision that I just described. That technology is the enabling factor for us to be able to capture these transactions as it's happening and be able to reward the suppliers, the producers, the employees, the innovators accordingly, and in accordance to the real tangible benefits that they bring to society, right? But technology is an enabler, but that's not the driver. The driver is, once again, how can we create that paradigm shift, right? How can we create a world where we value and we can create products that match our ethical and moral worldview that we don't have today? And frankly, that's the biggest opportunity. If you're a profit-seeking investor in the Islamic finance space, or as any conventional investor, that's a green field. And why is that a green field? Because that is a place that no JP Morgan, Credit Suisse, Goldman Sachs is going to go to. But that is a place that, number one, reaches out to the critical mass of population that's not financially included today, which is a profitable endeavor. And that also allows us to start monetizing real economic progress. So fintech matches this ethos that we just talked about. And it does it, I would say, unintentionally. But it definitely gives Islamic finance an opportunity to ride this wagon and see if we can start working towards that utopian vision that I described at the beginning. So what does fintech do? Number one, it democratizes access, right? As we talked about branchless banking, this is something unheard of 10 years ago. But it's been able to start banking individuals that previously didn't even want to be banked. In Sudan, there's a very good example. In Sudan, you have 5% of the population that has 5% of the adult population has a bank account. But 10% of the adult population have transacted financially on their mobile phone, right? So that's an opportunity, once again, that we're capturing 10% of adult financial activity in a country. There's endless opportunity from an Islamic finance perspective to go into PLS with them, to start investing in their person, to start creating human-centric solutions, because we now know what transactions are happening, where and when. The second thing is disintermediation, right? Now, if we don't have to necessarily go to a bank to be able to be a part of the financial fold, right? There are services in the fintech space that are more tailored, more human-centric, which goes to the next point. The customer experience is dramatically better than it ever was, which then motivates people who don't even want a bank account to maybe engage in a service that benefits them. It may motivate a farmer in Bangladesh to start partaking in a financial service from their mobile phone, even though they don't have no interest in actually formally opening a bank account. But that's one step closer to bringing people into the financial fold, right? And real time has everything to do with Islamic finance. Being able to capture everything as they happen, when they happen, and then being able to forecast that going into the future allows us to create solutions for the next generation. So is fintech here to stay? What is that penetration? That's what we'll talk about in the next slide. I mean, we all know that it's been a dramatic movement. In fact, between 2010 and 2015, 700 million new people opened a bank account. That's a phenomenal stat. And if you look at it from 2016 till now, there's still 2 billion people that still have the opportunity to start banking. Now, this is the global investment between 2010 and 2015, as I just spoke about. Those are big numbers. Then if you just look at it from a one-year snapshot from 2015 to 2016, that's the growth in investment after all of that investment that you just saw. So it's not coming to an end because the potential is real. So what is the opportunity for Islamic finance, right? And going back to what I started, is that by 2020, 2/3 of the world, that's 2 in every 3 adult individuals will be internet-enabled. That's 3 billion more people coming in to the digital economy. Right? 80%, according to our own research, 80% of this 3 billion will be from Muslim majority markets. And for the first time, this will be their first banking experience. This will be their first financial transaction that they're ever partaking in from their phone, or whether it be their computer, or whether it be through some sort of other medium. So there's a real opportunity to play in this space, and it's going to require the entire ecosystem to come together to help prop it up. So coming back to that vision that we talked about, right? So what is financial inclusion? How does Islamic finance play? What is technology? Technology is a driver, but it's that creating that ethical paradigm that will motivate other individuals and the mass market to start adopting our solution, right? It's that why, right? Now, if you look at the best companies out there, if you look at Tesla and Apple, there are other companies doing similar things, but it's that why, it's that proposition that I'm creating a product that's sleek, that's new, that will always be ahead of the game. Or in Tesla's case, it's environmentally friendly, it's technologically advanced. But that's that why that Islamic finance hasn't had yet. That what has always been there, that Sharia compliance. But really the next step, especially in Islamic fintech, is that can we go from just Sharia compliant to Maqasid compliant, right? That's that next step, and that's what technology enables this industry to achieve. So just to kind of throw it out there, is this real or is it just me, us imagining things that are not close to happening right now? No, it's pretty real. There are companies that are stepping into this space and creating actual benefit, both financially and socially. So what is this ecosystem that we need? Who are the players? What is the DNA basis of Islamic fintech, and how can it replace the status quo of today? So for us, from Finocracy, we've done a lot of research. We're wondering, what does Islamic financial technology look like? Because what we don't want as an industry is to have that same criticism the same critics that have been criticizing Islamic finance for ages, which is that, is it just another mock-up or carbon copy of what's in the market today? No, but it's not. Because for the first time, there's actually technology to enable some of these utopian, some of these pie-in-the-sky thinking. And for us, there's 4 core technologies that any Islamic fintech product must share in, at least one of the 4. Distributed ledger technology, which is smart contracts, being able to create contracts and then letting the contract do the rest of the reconciliation, right? There's P2P. So we talked about that electric solar grid. Nowadays, when it comes to renewables or when it comes to other sectors, people are being able to produce, right? We no longer have to resort to purchasing or consuming from big companies. So can we create that person-to-person network that we can both consume and produce from a financial perspective, right? And it is machine learning, artificial intelligence, and then really the change maker for the future of Islamic finance is IoT. So, and what IoT allows us to do is a very critical concept in Islamic economic theory, which is, can we start animating the real economy, right? Can we start seeing the financial data metrics from a electric solar grid, or from a wind farm, or from a farmer producing agricultural goods? Can we bring that to life, right? And that's what IoT allows us to do. So there's going to be some core areas that conventional fintech and conventional players will not go into. And this is where the divergence starts happening between conventional finance or conventional fintech and Islamic fintech. Renewables is a very essential part. Credit scoring. Do we have to continue to ask individuals, whether it be in microfinance or at mainstream finance, for collateral, or can we start collateralizing and understanding the human qualities of that person? Can we start understanding their technical skills, their ability, their integrity? This technology exists today, right? SME financing will be the game changer if we're able to meet the SDGs when it comes to achieving shared prosperity. Can we start financing them and taking risks with them, right? And then philanthropy is absolutely a critical component to financial inclusion. There are inbuilt financial facilities within our heritage that allows us to do it. Technology will just allow that to scale. And finally, who needs to be involved to make this a reality? There's a very prominent saying in Silicon Valley that change, when it comes to technology, change never happens as fast as we think, but the resulting impact is always bigger than we could ever predict. And this is always true when it comes to social media, mobile phones. It never happens as fast. We had those big satellite phones for decades. Then all of a sudden, everyone had a phone before you knew it, right? Twitter just started 10 years ago, and all of a sudden, everyone, presidents are tweeting from their mobile phones, right? So that change will happen, but it's going to require startups and young people to come up with new paradigms, right? It's going to need the industry to come up and support that, support those startups, to continuing to build our capital and build our talent base, and of course, regulators to create continuously an enabling environment to make that a reality. Thank you very much.
Thank you very much, Brother Rafi. And also thank you to all of the panelists to share their views. For the next part of the event, we plan to have a panel discussion moderated by Sister Nida. So over to you, Sister.
Assalamu alaikum, everyone. I thought I'd walk around, make sure everybody's awake. and see if we can participate from down there to our esteemed panelists. So I will come down, and I will start the first question. And after that, I am hoping that some of you will think of some questions and allow me to allow you the time to ask the questions to our esteemed panelists. So I guess my first question, I should do it straight to Brother Najm if I can. You spoke about certain things that you have learned in terms of the investments that you have done in various different member countries. So because our theme is about financial inclusion, can you give us an example of an investment which you did? You mentioned Maldives Islamic Bank, or maybe another investment where you thought that you actually demonstrated this inclusion as far as Islamic finance is concerned. So whether it's Pakistan or any other country, I mean, it's not as if banking doesn't exist. So what is it that was different in your investment, or what you were able to do with the sponsors and in your investment to make a real difference in terms of financial inclusiveness?
Okay, you can hear me? Is this okay? I think if you look at the banks that we have set up, I would like to just share two examples. One is the case of Maldives. Maldives is a relatively small country, 340,000 people in Maldives. When the Emirate flight leaves in the evening, the population goes down. That's how small it is. So when this bank was being set up, we had people were so skeptical that they said, you cannot set up a bank over here with such a small population. It wouldn't make an economic sense. There were already 6 banks or 7 banks in the market. But this is the power of Islamic banking. We, at the last minute when we were going to put the money on the table, one of our partners backed away, and we had to actually go and put 85% of the total equity. We had to take a special approval from our board to do that, because by articles we are not allowed to do that. And the government of Maldives came in with 15% so that we could make a bank. But the response that we got, because of the fact that we were bringing in a product which is Islamic banking, there were so many people. When we set up the bank, people would take 2 to 3 hours before they could open the account. This is the power of Islamic banking, because people wanted to go into a halal option. In many cases, I have had this experience of people coming to me, talking to me and telling me that, we had this small vehicle, we had this small fishing trawler. We didn't want to increase our business because of the fact that we are averse to riba, and so therefore we only want to do enough business as much as our pockets could afford, whatever capital that we had invested. But only when an Islamic bank came in, we were able to go in and borrow from them, and as a result, we have now increased our level of business from X level to Y level. In fact, now we are getting a study conducted, and we have MIT working with us on this, on financial inclusion, so that we can actually demonstrate that how many people who are our customers. In Maldives, we have about plus 50,000 people out of a population of 350 who are already banking with us, and the others are not banking because we are not present in those islands. Maldives is about 1,200 islands across, so there's a fair amount of geographical space that we have to cover. The infrastructure, we don't have enough to be able to move that. So how many of these were actually not banking before, and just because of Islamic banking coming in, they were able to add on to it. Now, for that, it's very important that the financial institution that you set up is a successful institution. It must be financially strong to be able to deliver. It must be profitable, and I think this is where our role comes in. We need to make financially sound financial institution. The case was the case in Kenya. In Kenya, when I went over there, population 36 million, Muslims 10% of that population, so relatively small. But again, the Islamic banking took off. There was no Islamic banking, and suddenly you find now, because as they say, nothing succeeds like success. And so therefore you have now all 14 banks, a conventional bank opening up Islamic windows, 2 full-fledged Islamic banks over there. Now, I don't think that there's been an empirical study or a real study which has been done to demonstrate that how many people have come to banking or have increased their business because Islamic banking is available. We are now getting that study conducted, and I think we'll have the results next year. We are doing it for 3 of our banks, one from Maldives, the other one in Senegal. We have Tamwil Holding and 4 banks in that region to actually demonstrate that how many new customers have actually come in, just because of the fact that they have a proposition which actually gives them something which is in line with their faith. But nevertheless, having said that, in Kenya, my own example was that a majority of people who came in and took financing from us were non-Muslims. They were Christians, but for their home mortgages and for their vehicle, they would actually do that because they felt that even whatever the case may be, this is still more, this is an ethical way of doing business. And I'm talking of the time in 2008 when we had this huge financial crisis and people were really suffering at that time. So therefore, even non-Muslims felt that it is better for us to support this form of banking because it's based on certain assets and it's more ethical than as compared to a debt-based financing, which is what the current system is, which actually just burdens people more. So our own example of this has been that we would like to actually scientifically demonstrate financial inclusion, and I think by end of this year we'll be able to do that. But for us, we have strongly felt that when you bring in a proposition which is Sharia compliant, it's far more attractive than just a conventional bank being set up in that market.
Thank you. I'll pause here, see if there's any questions. Okay, still thinking? Oh, you have a question, okay. Please introduce yourself and a brief question, please.
Thank you. My name is Adil Ashraf. I work for Islamic Development Bank. Interesting listening to all the speeches here. First to Brother Irfan, the Islamic banking industry remains a minority financial player in the financial markets despite operating in majority Muslim countries. Learning from your experience, I would like to know that how this, one of the reasons that I think is this skepticism, which still, persists in majority of the populations, and because of which they are still delaying their decision to move from financial to, conventional finance to Islamic finance. So what do you think, what's the major, boost which is required to, remove this level of skepticism? To Brother Najam, I would like to say that corporate governance versus one man, the most important factor, the first factor that you were talking about the success of Islamic finance was the one man. Was it made that, did this carry so much weight because of the absence of the proper corporate governance structure for an Islamic financial institution? And ICDB being a market leader towards development of Islamic finance, should we not even give much more weight to the corporate governance structure and probably evolve one that we can copy across the different countries? And probably this will again ensure, I would say, long-term sustainability of all the hard work that ICD and you have done over the years. With regards to fintech, I would like to just say that yes, huge potential and growing very rapidly, but now, even today morning, we were receiving, the media is all over with the new kind of viruses that we're having. So this comes with the risks of its own. All of your money is in a server now. So how fintech is going to look and address this new risk also, which it brings with itself? Thank you.
Thank you.
I'll take the first question. See, skepticism and constructive criticism, I think we should differentiate the two. Skepticism is very easy to say, you going anywhere, somebody would just make a remark and normally, you keep hearing this thing that people who have a negative mindset, they would speak out. People who are positive, they would do their work and not be so vocal. So I think the proof of the pudding is that in Pakistan, Islamic banking has grown from 0% to, I think, currently 13%. Why is 13% and not, for example, 20%? Is only 15-year-old industry right now. And our main problem in Pakistan is the non-availability of liquidity instruments. That, when banks are so flush with liquidity, that they're actually disincentivizing their customers to bring in deposits because, we can't make use of the money. So customers are coming, but we don't have available investment opportunities to deploy those funds. So I think if those opportunities were there, this number would not be 13%, it would be much higher, close to 20-25%. So I don't think there's a problem there. People feel that the Islamic is Islamic. People who don't want to do it, they would make noises. especially if you're working with a conventional bank, just to justify to your mother, father, brother, sister, dog, cat, you will say that, no, everything is same. You're holding it like this or holding like this is the same. So it's not the same. I mean, if it was same, then people will not come in and open so many accounts. So you're actually seeing proof of the pudding by people who are coming in. So I don't personally agree with this cynicism or skepticism. I mean, obviously the small components would always be there.
Thank you. Brother Najim, do you want to take the next question?
Right. I think, it's important, corporate governance. No one can actually just say no. But I think when you look at the board, I'm sure that you've been on boards. I'm on many boards. The board has a certain job to do, and it's impossible for the board to really run a bank. It's not supposed to do that. It's supposed to get the right person on the top and make sure that the right management is there and make sure that the credit risks, there are checks and balances that are available over there. At the end of the day, once you appoint a person, you actually give him the key to run the bank. He flies the plane. Now, if he's reckless, you're going to know the result. There'll be only one accident, one incident, but then that will be game, set, match history. And I think that's what we really want to prevent. In a bank, you have to have a person who understands, who is prudent, who is not really risk-averse, who can take the risk and grow the market. But for us, we have felt that in markets where we have put in wrong people, we have the same boards, same corporate governance, everything, but we've had dramatically bad result, and in other markets. So it's very important for us. I think for any board, I think the key responsibility for the chairman of the board and the directors of the board is to make sure that they pick up the right CEO and then enable him and empower him and give him support and be on the same side. The board and the management are not on the opposite side, which typically, we see as a control function. So I would like to maintain that for us, a critical success factor is to have the right person at the top. Without that, I think it becomes increasingly more challenging to run a bank. Yeah.
Thank you. Rafi, I'm just going to ask you to hold off on responding because I have another question to go with the one that was asked. But we have another gentleman here who would like to ask a question.
Mon nom est Touré Bassari. I guess you speak French or you understand French. Mon nom est Touré Bassari. Deux questions rapides. Et la première question, I will translate it quickly. La première question, c'est le coût des interventions. Comment vous arrivez à les minimiser? Parce que ce qu'on nous rapproche, nous, le plus souvent, c'est qu'on a des coûts d'intervention élevés. Et ma deuxième question, c'est les défis les plus importants que vous avez rencontrés. So, two questions. How do you minimize the cost of your intervention? More often, it is said that we are too expensive as far as interest rate is concerned, at least in our countries. And my second question is the main challenges you face in your different intervention. I would like to know. We talk about skepticism, that's right. But are there other problems you have really faced? Thank you.
Two great questions. What are the constraints? That's the second question. And the first is, you heard it.
The cost.
Exactly. How do you drop costs? Now, I know Rafi touched on it in terms of fintech. I think Irfan touched on it from the perspective of branchless banking, etc. But there is the grave question that we talk about, that operationally Islamic banking is more expensive because of the advent of Sharia boards, etc. So could you shed some light, both from Mizan's perspective, ICD's perspective, on what can we do to try and reduce the cost of operations? That's one. And the second is in terms of what can be done to go forward on this.
I think I really, like I said, it's a very good question. In fact, somebody was asking me in the lobby. The greatest problem of any new bank, not just Islamic bank, any new bank, is excessive cost. I always, in a light-hearted mode, I would say that, you're dealing with money, you see depositors' money coming, and you start feeling that's your own money and you start spending it. So banks generally have a much higher cost base than non-banks. Everything just goes up. I mean, if you want to hire good talent, you would go and recruit the best people, and if they're getting 10, you'll offer them 20, somebody else would offer them 30, and very soon it'll go out of hand. So I think keeping a handle on cost is very important. fintech will reduce cost for Islamic banking. It will reduce cost for conventional banking as well. So in terms of being competitive, no change. I mean, if overall cost structures are going to come down, it will come down. But your mindset has to be there for cost saving. If it's not there, I mean, for example, a seminar in Dubai, I was sitting like this somewhere, and there were 6 people on one table from one Islamic financial institution, somewhere not from Pakistan, not from Saudi Arabia, and all 6 of them were watching a same movie on the table, right? So there were 2 of them were having one screen, the other 2 one screen, the other 2 one screen. So I mean, this is sheer throwing away of money. I think we need to be entrepreneurs there. If we just become bankers, it will not work. We need to be entrepreneur. We need to be honest, and we need to see how we can control the cost. Mizan has grown unprecedented, right? Despite that, we managed to keep it within control. So it's a mindset, really.
But can you tell us from your perspective, Mizan compared to another conventional bank in Pakistan, are your operating costs higher? And if so, what do you think you can do other than your regular cost management that anyone would do in any bank? How do you think you can be competitive? Because like you said, fintech doesn't see the color of money, it's Islamic money or not. Money is money. So how do you compete effectively?
See, when I compare with Mizan, our cost-income ratio, if they exceed, it exceeds only for 2 reasons. One is our top line is a dented top line, right? I mean, because we're not able to invest our money in the same manner as in conventional bank. Yeah. So obviously, for example, if the benchmark is LIBOR, then the Islamic bank benchmark is LIBOR minus X, because it's a lower benchmark. Right. You tend to spend, give away that money because there are no alternatives. Secondly, if you're in a growth mode, like last year we opened 122 new branches. Obviously, those branches do not break even for 2 years. So for 2 years, there'll be less income and more expense. So that's why the cost-income ratios were high. But otherwise, I feel that in terms of like with like, we are more efficient than our conventional counterparts.
Brother Najm, do you have a comment? Sure. Just 1 second. Brother Najm, do you have a comment to make on this?
I think Irfan Saab really aptly covered everything, and he's practically demonstrated how important it is to be frugal. What I've seen in life is bankers tend to be grandeur. That's how they are, because they deal with money. That's their personality. They come in from these big fancy banks. A beautiful building which has granato imported from Italy would not produce beautiful banking. But you see some of the best buildings, the highest and most expensive buildings that are there. These belong to the banks. And Citibank has lost its capital many times over, and they have the finest offices, etc. over there. I think this is where the problem starts in. When you have too much money, you feel you can actually make whatever you spend, you're going to recover. The spreads are going down in every market. You're working on very, very small spreads with NPLs, with credit risk and all that. I think what you need to see is my investment going to really help me? Is it going to improve my customer service or not? Now, if that is there, if the case is you want to go in with technology, spend more money on a good core banking system, have better, give a feel to the customer, that's fine. But a lot of these expenses that are done by the banks and a lot of these annual meets that are there in various fancy countries, I don't think that they really add value. They definitely add huge costs to the operations of the bank. And I think that's something that when you're going in initially, you need to make sure how much money I would really need for my capex, how much is really necessary for that. So efficient use of capital is so important. Without that, you just tend to overspend in the beginning, and then it takes you a while before you can actually get a benefit out of it.
Okay. Yeah. We have a question over here, but before I ask that, can I ask a question to the Indonesian colleague? You talk about Islamic banking penetration being very low in Indonesia, yet we hear many thousands of cooperatives and Sharia-compliant entities, etc. Just adding to the question that was asked earlier, what do you think are the constraints? What's stopping the average person, whether they're a Muslim or not, coming into the Islamic fold, in your view?
There is an interesting experience that I did a few years ago regarding about how they perceive banking system in Indonesia. They don't trust them. They don't trust banking system. most of the time, actually, the conventional ones actually provide some kinds of fee-based incomes. So, for example, even my driver, when the balance actually below a certain level, suddenly he has to pay additional fees for that. That actually is the main problem in our system. So the second one is that actually they believe if it is a banking system, even it is Sharia or conventional, banking is a bank, banking is bank. Then if I have to go there, I have to look nice. There is a conditional cash transfer program in my country that we introduce a big state-owned banks to become the channel of the payment agent here. They require the beneficiaries at least to use shoes to take the money. So this kind of policies that we think makes the people do not like banking system. Yeah? So that's why actually we introduced postal system here, because it is there from many years ago, long time ago, actually, since more than 100 years ago, and actually it is around the corner, and the people are very friendly from the postal offices, and then why not go to the postal office? So this kind of things that actually we found from our study.
Okay, thank you very much. Your question, sir.
Bismillah ar-Rahman ar-Rahim. Actually, I think the facilitator touched part of my question. And we're talking here two things, I think, in my opinion. Inclusiveness, Sharia compliant. The key question comes if the existing Islamic banks or even, neo banks you open, are they attracting non-bankable part of the society? This is the key question. If you see people moving from existing banks, you look, is there any value added by the Islamic banks? And that's the key question. Even those countries who have Islamic banks, maybe in 10s or 20s, is there change for all this period? Those banks are attracting new customers who are convinced Sharia compliant banks are more ethical aspect, yes, but there's also material, monetary aspects of it. So I think there's more work to be done. And the key question to the panel and to the also audience, I think we have to look, there are two aspects to this whole forum, I think. The one is the Sharia compliance and the other one is inclusion. And inclusion, the way my interpretation is to it, am I really offering service to those who were not able to come to the conventional banks? Thank you.
So bringing unbanked into the market. So I can start with Mizan Bank. Can you tell us if there's a study that's been done or analysis that you have taken, looked at since 2002 when you got your license to today? How many of those customers are first-time bankers in terms of doing some kind of transaction that they didn't do before or that they weren't in the financial markets at all? Please.
I think good question. Unfortunately, it's very difficult to do a study on this, but based on like informal data and the kind of people who open the account, they'd never gone to the bank before. Our own feeling is that at least 30 to 40% of the accounts which Mizan Bank is having were non-banked before. Right? This is a feeling. Now maybe that number may not be 30%, maybe 20%, but still it is 20%. So I think the question or the problem is a twin problem. One is you want to bring Sharia compliant solution to people so that they stay away from, a war with Allah and Prophet. So that is our first objective. Our first objective is not to do a resource mobilization. The government first objective is definitely to do a resource mobilization. But I think an Islamic bank, if it's formed on a right mindset, our job is to bring something to the people so that they can, benefit in the same manner as other people are benefiting without violating Sharia principles. What collateral incremental that brings in, that is obviously bonus. So, I would give you an example that if you have a McDonald's in London selling non-halal meat or a product, people, even Muslims would go, not all of them would go, but they would go there. But if McDonald's tomorrow opens a counter and says that this is halal section, I'm sure that 90% or 95% of Muslims who were going to the conventional McDonald's will probably divert there. And they will also get new customers who are not coming into McDonald's. So you really, it's a twin strategy that you get people converting from conventional into Islamic, and in process you're going to get people who are not going to go into banking because of faith reasons, not going to McDonald's because it wasn't halal.
Okay, thank you. Brother Najm, could you touch on maybe the Islamic contracts that allow for those that typically would be outside of the conventional banking to come into the market? We found from the line of finance transactions that ICT has been able to do that in fact, you gave an example in fact of a Sharia compliant fishery business in Maldives. Now that might be because they didn't want to look at any other forms of banking besides Islamic. But in some cases, on the conventional side, SMEs typically will come up and say, I don't have the required collateral or the guarantees, etc., that my bank needs in order for me to come into the financial market. How does Islamic banking separate itself or stand out that shows a slight difference to maybe the conventional banking model?
I think probably Irfan Saab would have been better to answer this, but from my own experience, as far as the security of is concerned of a transaction, there's no difference between Islamic and conventional banking. Islamic banking, I think a lot of people feel that if you go to an Islamic bank without any security, without any collateral, you will be able to do a transaction. I think this really depends upon the risk appetite and various projects. I'm not saying that you need to have some kind of a security, but I think Islam is indifferent on that. If you know the longest ayat, Surah Baqarah, ayat then, which actually talks about when you give somebody a loan, then take a rehan on it, which is used as a basis. So you can use a security which is according to your risk perception. If you feel that there is a risk in the transaction, you will take a security. And we are indifferent as compared to a conventional bank and an Islamic bank. I don't think that Islamic banking by itself, by its very nature, although the nature of transaction is such that either it's a trading transaction or it's buying an asset, so there is a real wealth being created in a society. In that way, yes, it's a real transaction. But other than that, from a point of view of a purely, whether you have a collateral for that transaction or not, I think it's indifferent. It's the same as a conventional bank. I mean, I could be wrong, but if Pansab wants, he can add something on that, yes.
No, I think you're absolutely right. In fact, there are a lot of very large corporates who would come to Mizan Bank for doing banking business not because of faith, but because of convenience, right? We would probably do business with them with no collateral as well because we're not worried about the money not coming back. But, if you go to a small SME customer and if that customer takes your money and doesn't bring it back, whose money is it being lost? It's not shareholders, it's the depositors. See, typically in a bank's balance sheet, any bank's balance sheet, Islamic or conventional, about 90, as per the Basel requirements, 92% of the total balance sheet is from deposits and about 8% is coming from the shareholders, which is the capital. So really what the central banks, every country's central bank is trying to safeguard is the depositor's interest. The shareholder has taken the chance, the risk and whatever, reward, whatever, they're put in the money. But it's the poor depositor who actually deposits the money in a hope of getting a return and the money back as well. So our prime concern as people who are managing Islamic banks is to make sure that our depositor's interest is protected. And if we do, reckless lending without collateral, it can jeopardize, very easily. I think probably your question emanates from the thinking that Islamic banking, when we talk about cynicism, is that it should be musharaka based, on a profit and loss sharing basis. I think musharaka financing is one small mode of financing in Islamic finance. The balance, muraba is legal, istisna is legal, legal means Sharia legal, ijara is legal. So, there are a lot of modes of Islamic finance which are all halal and comparable to conventional finance. If you talk about equity finance or, musharaka finance, then you've got private equity firms in conventional banking as well. So that is equivalent to musharaka finance. So I don't think we should ever confuse Islamic finance to being a profit and loss sharing thing? Because there's a very small component of profit and loss sharing. Others is, I mean, Muraba is a fixed term contract, rental is a fixed term contract.
Thank you. We have a few questions from the floor. We'll start with this gentleman here.
Merci beaucoup, Madame la modératrice. Je commence par féliciter et remercier les membres du panel qui ont fait de très excellents exposés. Enfin, je commence par me présenter. Je suis Lousseni Nabil, le gouverneur de la Banque centrale de la République de Guinée. J'ai des aspects qui peuvent être considérés comme questions et d'autres aspects comme commentaires. Le premier aspect est lié à l'intervention de notre frère de l'Indonésie, je pense, quand il a évoqué la stratégie nationale d'inclusion financière de Malaisie, avec lié à cela aussi un plan d'architecture pour la finance islamique. Je souhaiterais qu'il donne un peu plus de détails sur le point de rencontre entre la stratégie nationale dans son ensemble et ce qui concerne l'architecture pour la finance islamique. Le second aspect est lié à l'irruption du mobile dans la vie tout court. Je ne sais pas si c'est... I don't know if I have to... That's correct. Thank you. Donc le second aspect est lié à l'appui de la Société islamique de financement du secteur privé quant aux régulateurs, au cadre de régulation en ce qui concerne les microfinances. Je crois que cela a été abordé dans son intervention. L'appui aux régulateurs. Maintenant, est-ce que cela ne peut pas être élargi à la téléphonie mobile, aux services financiers via la téléphonie mobile, étant entendu que quelqu'un l'a dit ici opportunément, avec le taux de pénétration de la téléphonie mobile et le vecteur que cette téléphonie, dont cette téléphonie sert aujourd'hui pour développer les transactions financières, je crois qu'il serait important de trouver une fenêtre d'appui de la SID au niveau de la téléphonie mobile, les services financiers vers la téléphonie mobile. Si je prends le cas de la Guinée, le taux de bancarisation est très faible, moins de 10%, mais le taux de pénétration de la téléphonie mobile dépasse à peu près les 100% aujourd'hui. Ça ne veut pas dire peut-être que chacun a un téléphone, mais il y a beaucoup de gens qui ont plus d'un téléphone. Donc le taux moyen fait plus de 100%. Donc il faut profiter de l'opportunité offerte là. Et je crois que de ce point de vue, des pays comme les nôtres peuvent avoir besoin de l'appui technique et même financier des institutions du groupe de la BAD. Je vais aborder un aspect qu'un de nos collègues a évoqué tout à l'heure qui concerne le coût des interventions. Je crois, partout où on parle d'institutions de microfinance, notamment, je ne parle pas de la banque de façon générale, mais des institutions de microfinance, il y a le coût d'intervention. Je crois, sa question, en tout cas, celle sous-jacente qui m'est venue, c'est d'avoir un élément de comparaison entre les coûts en ce qui concerne la microfinance islamique et les coûts de la microfinance classique. Est-ce que pour la microfinance islamique, les coûts d'intervention et le coût de sortie de crédit au public, ce coût-là est abordable par rapport à la microfinance classique? Voilà ce que je voulais dire, madame. Je vous remercie.
Thank you for the question. So just to summarize, I think for our Indonesian colleague, the question was around kind of explaining a little bit more about the national strategy, if you wouldn't mind, from a Sharia compliant perspective. And the second is two related questions, which is about microfinance. Now, Wasim touched on this in terms of providing the enabling environment for microfinance and interventions in microfinance, but more towards Rafe, maybe. Could you tell us, in your experience, even on the conventional side, and we can take examples in Pakistan and in Bangladesh, etc., where mobile telephone is adding to the financial inclusion in terms of transactions for branchless banking, etc. But how can we use it more effectively on the microfinance side, where every dollar and every cent matters? Because we find in microfinance that when you try and talk to some of the conventionals who want to offer Sharia compliant microfinance contracts, and they don't have the capacity to do so because every dollar they have available goes back into the business. So how do we very quickly accelerate Islamic microfinance, at the same time bring costs down possibly of transacting from an operational perspective?
Yeah, that's a very good question. And I just spoke briefly on Sudan, which is we're doing a lot of work in Sudan, so I can speak. And it's really interesting. So in Sudan, 5% of the adult population has a bank account, but 10% of the adult population has actually transacted via their mobile phone. So 10% is not how many people have a mobile phone. 10% is how many people have confidence enough and the know-how enough to actually make a transaction via a mobile phone. So that has wide-ranging ramifications, right? And one of the ramifications is that if people are that confident that they have more confidence in transacting via their mobile phone than actually going to a physical bank and opening an account, then from a microfinance perspective, there's a lot of opportunity. And the first and foremost opportunity, in my opinion, and what we're trying to focus on, is bringing down the cost of assessing risk from an individual perspective. Now, if a person is willingly interested in transacting via their mobile phone, then that data that they're transacting with on their mobile phone becomes collateral. It becomes a mechanism by which we can start assessing their credit. And if you can do that, and if you don't have to take physical collateral, that right there is, from our estimates, 60 to 70% of the costs that microfinance institutions bear. That's on one point. And then a second perspective from just purely the mobile industry, Kenya recently issued an entire government bond and allowed anyone with a mobile phone to invest in that bond. Now, that's absolutely phenomenal. We're talking about financial inclusion. If an individual at the bottom of the pyramid can invest in a government bond via their mobile phone, then the opportunities are limitless for both the government and the individual themselves.
So just to go back to your example of Sudan then, and I realize there's some questions, just bear with me a minute. How have the regulators come into the foray to give, it's all very well coming up with the best application, etc. But if you don't have the regulatory support in order to be able to do so, whether it's called photographic check clearance or whatever you want to say, or branchless banking, what has been your experience from Sudan's perspective on the regulatory support on providing these branchless banking models?
Yeah, I mean, both in Sudan and out of Sudan, it's actually in the regulators' interest to start transacting from mobile phones because it's easier to understand what the market is doing. Everything is in the digital framework of the mobile networks. But in Sudan, you have an additional benefit is because Sudan has rolled out a very successful biometric identification program. Most citizens have a biometric ID in which they need to use to get a SIM card. That's kind of the next phase. And because of that, regulators have confidence that if transactions are happening via mobile networks, it's all within the purview of the government and therefore much safer to regulate.
Thank you. We have a question on that side. Please, could you introduce yourself and ask your question?
Abdul Qadir Thomas, Shape Knowledge Services, Kuwait. Je voudrais suivre la question du gouverneur de la Banque Centrale. He raised a very interesting point, I'll ask in English, which was really, when you have 100% phone penetration, how do you replicate the success of programs, I'll be particular, like M-Pesa, where you actually have a very high use amongst Kenyan low-income citizens? And that actually was a question that I wanted to ask before the governor asked his. A second question I have, so it's really, how do we have examples in the Islamic sector of high degrees of telephone banking penetration using Islamic products? And my second question is more for Wasim. Brother Wasim, will we expect to see the bank investing in pure fintech plays in the future?
Thank you. Can we have the answer to that question? Najmul Hassan or Irfan, please. Wasim can answer the second part. If you could touch on the first about...
Can you summarize what... sorry, brother.
Yeah, so the question was around, how do you replicate the penetration that we have seen in the mobile banking industry, in the banking industry? How can you encourage... How do you replicate M-Pesa in Kenya, for example, in other countries around the world?
Yeah,
from an Islamic perspective.
Yeah, obviously, Pakistan has not gone in the same manner as M-Pesa has done in Kenya. Probably the mindsets are different. From a Pakistan perspective, I don't think Pakistan would have an answer to that. We are talking, the government is now talking about digitization of small credits, but it's still, I think, long way to go. We still need to see that happening, but I'm sure it will come. It's not there right now.
Thank you. Wasim, can you talk about what IDB Group is doing in the fintech space to stay in the forefront from the Islamic perspective for fintech, please?
I'll talk about the investment which the bank normally does in Islamic microfinance. We go to banks, we invest in microfinance institutions of various types. But at the moment, to answer your question, Mr. Thomas, we have not gone into the fintech space as such. It's really a very, very new field, and we're used to investing in sort of bricks and mortar, things which are just there, on the ground. So this is a very new area. I'm sure the bank should be looking at it as this field grows, and this is one of the very, very important fields to implement financial inclusion. But of course, we'll have to develop a policy on it as to how we can minimize the risks in investment when we go into this fintech investment areas.
Maybe I can touch on it from the private sector side. We're trying to be at the forefront of innovation, like you said, and fintech is something we cannot ignore. So ICD is working on potentially setting up a Islamic fintech incubator. We're working together with Finocracy and some others in the region to try and set up the equivalent of plug-and-play level 38 you've seen internationally, and be the Islamic fintech hub, where we will potentially, through this incubator, be running hackathons to develop what I'll call Sharia-friendly fintech technologies. What I mean by that is, if it's an operational technology that somebody comes up with, it doesn't matter whether you're doing Sharia compliant or non-Sharia compliant. It's going to be useful for either. But specifically to try and launch Islamic finance fintech, we obviously have, as IDB Group, the benefit of having invested in many Islamic banks around the world, and subject to those banks allowing us to test some of these technologies within their limited branch networks, we have the opportunity to then take these the results of these competitions that we may run to develop these apps and test them out, and then try and accelerate and potentially do a Shark Tank style VC type fund. But these are all things that are being thought of and developed right now, and we want to remain in the forefront of these developments as well. We have one more question on this side.
Thank you very much. My name is Mamadou Lamin Sise. I work with the Islamic Development Bank Agriculture Department. My question here is that working in Islamic microfinance as a tool for youth economic empowerment, we in agriculture are trying to reach the groundbreaking rules between financial empowerment and viable skills for our youth. What we realize is that providing microfinance to our youth without linking it to viable skills would still bring them back to square one. We have similar examples. Immediately after the Arab Spring, we have provided some funding to certain countries. We call it Youth Employment Program. We call it Youth Employment Program. But some of these programs could not take off ground as we really plan it, simply because we are just trying to meet the demand at that time without the actual empowerment through capacity building. And I'm very much impressed with the panelists. Most of them have vast lot of experience. I have been to Maldives when the Islamic Bank in Maldives was just starting. Then we had a microfinance program with the Bank of Maldives of 3 million, and unfortunately, this couldn't be utilized simply because they have no idea in Islamic microfinance. And this just reminds me what one of the panelists who said, for Islamic microfinance to function properly, we must have somebody who knows what it really meant at the top. I think this is the bottom line. A similar thing in Pakistan, I was in Lahore and we met Ahuat microfinance institution, and I think this is really impacting on the poor. But at the end of the day, are we doing this just to provide finance to the youth, or are we trying to provide finance for them in order to develop themselves and stay where they are and help their communities to emerge from that cycle of poverty to development? My question is that how can you microfinance institutions and those experienced personnel who are working with these institutions help IDB to consolidate our efforts in the various member countries through those MFIs that you are working with? Thank you very much.
Okay, I'll put that question to my Indonesian colleague. Can you tell us what you think, what the ask would be from IDB or ICD's perspective to help the microfinance industry from a Sharia compliant perspective, and make sure that you're not keeping them in that same circle of the microfinance industry, but you're actually graduating them to from a micro to a small, medium size, and small and medium to large corporates. What is the ask from your perspective from ICD and IDB?
I think from the Indonesian perspective on this, actually, we don't really have an issue on the microfinance, because actually, basically, the conventional system here is the largest one operating in Indonesia. But for the microfinance system, actually, from the private sector is the largest player as well, especially from the cooperatives one. So what we are trying to expand further is actually how we can expand the governance on the microfinance system, especially from the private sector, especially for the cooperatives or the Baitul Mal wa Tamwil, will be playing a better governance system, because it is still unregulated, to tell you the truth. Yeah, even though it is very popular, it is widespread, but again, it is not under the Financial Service Authority's regulatory scope. So this is actually what we are trying to do in the future now.
Okay, so enabling environment is something that you're looking at potentially.
Enabling environment, yes. Enabling environment is actually not only for improving the regulatory system, but also in the socialization. Because most of the time, what we are lacking now is the understanding of the products. Because most of especially from the formal sectors, we are still using actually the terminologies actually from the Arabic terms, which is very alien for them.
Sure, thank you. I'm going to take one question. Okay, I think Brother Najim has something to say.
Right. I think we just need to be, when we talk of microfinance, one, there is not enough evidence in this world, despite many studies that have been conducted, that microfinance has been able to reduce poverty. It has definitely increased the indebtedness of poor people, but whether it has been able to overcome the goal of reducing poverty, that's questionable. And the reason for that is that in countries where you have interest rates ranging from 8 to 10%, microfinance is lending at 25 to 30%. It's nearly impossible for a poor person to be able to generate that much amount of wealth that he comes out of the level of poverty and pay the bank 25%. When rich people like you and me will be paying 8 to 10%, and that's also difficult for us to create that much amount of wealth. So unless you combine a social element with microfinance, unless you can combine that with microfinance, you have to have that social element of saying, look, in Islamic microfinance, we would have the same, charge you the same profit rate as you would be charging to a conventional bank. And consider this to be a social service because of the high administrative costs that you will have to absorb. Only I think then it will be able to help to reduce poverty in countries. If not, it will increase the indebtedness. And we've seen that in many, many different countries where microfinance is, obviously there will be a huge offtake of microfinance. Every poor person needs money. But poor person needs money, and you need to really understand, first you have to enable him to be able to create wealth out of that. He doesn't have entrepreneurship skills. He doesn't have the ability to reach to the market. He doesn't have many of the abilities that we need to be able to create wealth in our society. So you have to first empower the poor people to do that. And I think the best way to do that is working through the SMEs, because that's where you will be able to have a maximum and more benefit. Just pushing microfinance for the sake of it with such high interest rates, I think it's more detrimental for the society than anything else. Yeah.
Thank you. So what we're hearing is from our panelists is that there has to be the capacity building that has to go with the financing, and we potentially have to lead the way. Islamic finance has to lead the way in trying to break or disrupt the market. And if conventional microfinances are lending at 25%, one could argue we come in and disrupt the market and come in at a lower rate and compete to the extent where we bring this down, but market together with the social aspect, which is capacity building. We have one question at the back, right there, and we have one question in the front, and then I'll wrap up.
Assalamu alaikum. I just have a quick question for the panelists. Inclusion, and especially in our Islamic countries, we always forget to talk about the females or the women in our societies. And they represent such a huge number. 70%, Brother Muhammad, you talked about, are still not bankable. We still haven't given them any banking products. So how does the panelists see maybe the usage of fintech kind of applications, encouraging these women to participate in the labor, save, giving them saving products? This will then in turn lower the cost of funding for these microfinance institutions or whatnot, and then these institutions can use these deposits to finance their respective clients. I think this, maybe if you guys can speak on that. Thank you very much.
So the question is, what are we doing about including women into the financial world? Present company excluded.
I think it's a very pertinent question. Obviously, 50% of the population needs to be brought into that net. In Pakistan, I've seen banks are actually offering special products. Not Mizan Bank, but one conventional bank was offering, a different type of a debit card with maybe more shopping incentive for shops which are more ladies oriented. So obviously if you go to hijab shop, I would not have an interest, but my wife would have an interest. So I agree. I think we must focus on that. We did start with the ladies branch. Unfortunately with one it didn't work out very well, so we got disheartened. But I'm just thinking that there's no reason why we should not give it a try again. I think it's a good pointer from my friend, and we should really work on it. I think it requires a lot of work.
Can you tell me if Mizan looks at big data in terms of trends analysis? So say somebody opened an account, women, men, whatever it is, and their constant average balance remains the same, because what they've done actually is they've gone to somebody else and opened another account there, and they do all of their car loans there or something.
Exactly.
Is that something that you're doing in order to tailor some of your products? And then just to go back to Talal's question then, how have you done analysis on the demographics of women, say in Pakistan, and how you can possibly look to bring them into the foray?
Yeah, I think the brief data analysis we've done, we're not too, up here on data analytics, but, there are two type of categories of one is the women who are actually working. So, their behavior of the account would be similar to anyone else. But generally housewives, so, whether money is actually in their husband's account or their wife's account, that money, the part of the money remains the same. So it's probably more convenient for the men to operate that account. I've tried my wife, she's a medical doctor, but I've tried my best to see if she can write a check, and I failed, right? So lack of interest probably, not lack of mind, but lack of interest.
Sure, thank you. We have one more question, then I have to wrap up.
Assalamu alaikum wa rahmatullahi wa barakatuh. My name is Dr. Muhammad Razaul Haq. I'm leading a social Islamic bank in Bangladesh, and my bank normally works in three-sector banking, model banking. Formal banking, Islamic commercial bank, as usual we are doing. And the non-formal banking, we are doing SME and microfinances. And third sector is a voluntary banking. So in SME and voluntary banking, we are lending at the moment about 9%. And what happens is the cost of fund, we are borrowing from the public, 6 to 7%, we have a management cost. So it is almost a marginal. We can't make lots of profit, out of that. And the voluntary sector, naturally, whatever, the Islamic Bank suspense account, we can't take in the profit. So we are doing lots of, voluntary banking. So what I request the ICD and IDB, you give us a low-cost fund at the rate of 4 and 4.5, so that we can invest this money to the huge poor people of Bangladesh, Pakistan, and other countries, so that we can give more lower than the 9%. And my request in the whole audience now, because you give us the IDB itself and ICD, you give us the low-cost fund so that we can enhance the microfinance activities. And I would like to add, Mr. Mizan Bank, like your payroll banking, agent banking, as usually you are doing, because I am one of the flourishing bank in the country, in Bangladesh. We are having the contacts with the ICD. Let's see what is going to happen. And I share with many of you, yes, we are doing quite good in Bangladesh. But now we need to enhance. I have brought about 48 branches in microfinance. So I want to have more activities. I have 126 branches all over the country. So I want to bring all of them under microfinance activities so that if I get the low-cost fund. Thank you, everybody. Assalamu alaikum.
I think the opening remarks on this question, similar question by Mr. Najmul Hassan, that we have to use microfinance as a social business. It cannot be worked as a normal business. Akhuat, you mentioned visiting Akhuat. Akhuat is zero. They don't charge anything right now. So they just give a qarz hasna and they take the money back, because the money is actually funded from zakat, philanthropy and whatnot. Now, one of our provincial government was so impressed with what Akhuat did, Punjab government, that they actually gave them an interest-free loan of 2 billion rupees. Obviously, if they gave them interest-free loan of 2 billion rupees, then they, on-lent it at zero as well. Taking cue from that, we did exactly what my brother is saying. Mizan Bank actually gave a small credit line, not like Punjab government, of few million rupees to the same Akhuat thing at zero. And the money actually came from our charity account. The money which we collect in non-compliant activity. It's a CSR activity. So really, rather than giving people by way of the money, it was a good thing that we give people this through a microfinance institution. We give them the money so that they're able to, earn a living through that.
Thank you. Something to add?
Yeah, I think this is a very important point. We recently have actually approved a line of finance for the first time for a microfinance, but we are in the process of actually figuring out that how we can lock, so that we are saying, fine, we will give you the money at a low rate, which is our normal rate, which suppose we do 3-4%, 5% for a bank. But we are saying, how do we really ensure that your spread over there, because we know that they are lending in turn at 18%. So we don't want to give them at a lower rate and then they keep all the spread. As long as they can demonstrate that by using our line, they will be able to give this money to poor people at a rate which we lock in the spread. So if we give it to them at 5, then they give it at 7 or 7.5. And we can do that. We're willing to extend line to them. And we have recently actually gone in and have our investment committee approve a line for a microfinance company where we would like the benefit of the low rate to go to the poor people. And it's a commercial line like we do for a commercial bank, but for a microfinance also we maintain the same rate. As long as the microfinance can demonstrate that our money has been used, I think we will be able to enlarge this program.
Thank you. Fortunately, time is up, and there are other events that are going on. So I'll just spend maybe 30 seconds summarizing. We heard from Wasim and his department that they have worked on the enabling environment aspect of for various countries to make sure that the infrastructure and the regulatory aspect is taken care of. And then also Islamic Development Bank Group and the private sector arm ICD has invested in equity in Islamic banks to try and further develop that level. We've had the example of Mizan Bank that started off being number 37 is now the 9th largest, and they're saying it's about true Islamic banking, it's about services, it's about staying current. The fact that they have this payroll card, the fact that they have this U-Pesa in terms of technology. The fact that they have remained current and they've listened to their customers means that they continue to be relevant to the market and they continue to grab market share in what one could argue is an overbanked country. From Brother Najm's perspective, we have found that in order to help the microfinance industry, the SME industry, our channel banking opportunities through providing lines of finance to our various banks has added and brought financial inclusion from that perspective. As far as Rafi is concerned, he's saying, look, we cannot ignore fintech. We all know this. Branchless banking is in front of us. We have the opportunity in those countries where Islamic banking does not exist as of now or is very small to use fintech to accelerate the rate at which we do Islamic banking. So that's a challenge that we all have, and we need to harness and develop that. And from the perspective of the regulator, there are things that the regulator can do from the perspective of raising awareness, from providing some kind of subsidy, from creating the environment and making it easy for people to come and deal with and do transactions with people that they're familiar with, whether it's going to the post office or doing it through their mobile phones, etc. So I'd like to thank the audience and I'd like to thank our esteemed panelists for their insightful presentations and discussion, and I'd like to wrap up here. Thank you very much.
I'd also like to thank Sister Nida for the excellent moderator role she's played.